Hey, check it out. IWM. Twice this week. What do you think? I don't know. It's pretty nice to see that IWM, a bearish trade in IWM, shows up in a cherry bomb trade 2 days after I put on a trade in a non-cherry bomb trade on Monday, right? Of course, I'll admit, not the same trade. I went with a long put vertical. They went with a short call vertical. Same bias of being bearish, right? It's just nice. It just feels nice. But anyway, I closed that IWM trade yesterday for 25% of the max profit in 24 hours. So I don't know if you did. I don't know if you're following along with me, because I do hope that this is an interactive channel, that you're doing what we do. You're following along. You can, modify the trades, of course, however you want. But I do hope that you play along with us. Anyway, we're looking at an IWM short call vertical. IWM has 4 drops of liquidity. Its IV rank was 10 on Monday. It's 13. I think it's almost 14 now. So we're actually going to look at short call vertical. I'm going to admit, I'm not terribly bearish right now for a couple of reasons. One, we've had several down days. Next, futures for the Russell are up 0.6% right now. So should we put this position on? I think we're going to feel some pain. I don't really want to give back all of the profits, but, hey, this is paper money. See? Hi, my name is Neil, and this is Option Theory, and I'm so glad you could join us today. It's Wednesday, and we're in the middle of our week, and I hope you're ready to get this trade considered for your portfolio. We use Thinkorswim's simulated trading as a flight simulator, and if you stick around to the end, I will tell you how you can join us and hopefully make this part of your trading or learning or practicing experience. So see you at the end. All right, so on screen here, let's take a quick look at the chart. And you'll see that this was the line we wanted IWM to cross through on Monday, and it did. Thank you very much. I'll go ahead and delete that price slice. All right, so now we've had several down days. This is why I'm bullish. So to be honest, I could see doing a short put vertical rather than a short call vertical on this one, or even maybe considering doing a long call vertical. Not my favorite though, because it doesn't line up with volatility, right? You want, when you're long, volatility to increase, and when things go up, they tend to not. So not a big fan of the long call verticals, but all right. Anyway, let's take a look at what the cherry bomb trade suggested. Let's go to the Analyze tab, go to the Add Simulated Trade. We're going to be in the April 30th weeklies, which as of today, Wednesday, the 24th of March, 2021, we're at 37 days to expiration. We would be looking to sell the 227 call and buy the 229 call for a $2 wide vertical. We could collect 66 cents on this one. Note that we have one contract in our one contract that we're selling. We're not doing 10. That was the default, so watch out. You can change your order defaults. I did a video on that. I hope you can check that out. All right, so let's go to the risk profile and check out our probabilities. Let's set the date to the date of expiration that we see in turquoise here, May 1st. I want to get my expected move here and set my price slice to break even at expiration. So we're looking at a 67% probability of profit on this one. It looks like, should we get filled at this, we're going to see a little bit of a bump. We're going to take some pain today. The question is, will it stay below this line in the next 37 days so that we could profit from it? Let's go ahead and set that price slice now to the chart so we can see the line we're asking it to stay below. And so we're asking it to stay below that line. It has popped up above that line and then decided that was too much. But if you look at this trend, right, is it time that it's not going to cross over that? Is it going to whipsaw and stay flat? It has done some flattish moves. Right, there's one. There's one. Will it last long enough? I don't know. I'm a little bullish on this right now. Where are you? Where do you find yourself on this one? So let's go ahead, and just in case you want to explore an alternative, if you wanted to stay short premium, let's take a look at doing a short put vertical. So 227 was roughly the 33 delta. Where does that take us over here? 34 delta. There's nothing here. They don't do that one in the weeklies. Okay. So what if we did this one? What if we sold the 210 and then bought 207.50? Okay. It's a little bit more risk on this one, but you're getting a little more profit. Let's take a look at this one and go with setting our price slices to break even at expiration. And in this case, we're looking at a slightly lower probability, but did I get that right? Yeah, I got that right. Okay. So I am looking at a lower probability, but more of the bias that I have for it being bullish. You know what I'm saying? So I don't know. I kind of like this one a little better. Now that we've looked at that alternative, what about being bullish with a long call vertical? Let's take a look at buying where are we? In the bid ask 218. So we want to buy, let's try the 217 and sell the 219. Yeah, risk one to make one. I kind of like that one. Set slices to break even. Yeah, the probabilities aren't as good. But, we've had a down day. We're looking like we're going to have an up day. Team Green looks like it's going to be making a comeback today. That would be kind of fun to put the opposite trade on 2 days later to see if I can take a profit on both days. I'm going to do it. That's okay. You don't have to do it. Pick any one of the trades that you like. Of course, this is all educational, and this is all simulated trading. I want to talk a little bit about that, by the way. You want to join us? Let me tell you how, right? Go down to the description box. Step 1, we have a link down there. It's a new link. Tasty Trade changed their sign-up page. They have the same email list, but their sign-up page is completely different. I went back to the month of March, changed all the links, so you should be good to go there. Sign up for the Cherry Bomb email list. That one, you'll get 5 emails a week, Monday through Friday, assuming there's a trading day on Monday, or Friday if there's a holiday. Obviously, there's no email for the trades if the market's closed. But anyway, 4 days a week, you get trade ideas sent to your inbox really early. What I felt was missing was actually putting these trades into practice. And wow, until Tastyworks comes up with their simulated trading platform, where we're going to use this flight simulator here, as I like to call it. So you can get all the learning without all the risk. Don't put your real life money at risk until you know what to expect. While this is not exactly like what it's going to be like, it is really close to what it would be like to trade for real. So people will be naysayers. They're going to tell you can't do this. You should hire a professional to manage your money for you. We, I think, know how good that feels. Handing someone your money and saying, take care of it, and then paying them even if they lose your money, right? Don't do that. Learn this stuff. You can do it for free right here. Anyway, when you are ready, I do invite you to hit that subscribe button and ring that bell, because these are options trades and they have time value. I'd love for you to be notified when these videos come out. I try to do them 5 days a week. All right, everybody. Until I see you. Oh, wait a minute. If you made it this far, you get a thumbs up. If you feel like I've won one, there's a little thumbs up button. If you hit that, I'd really appreciate it. Until I see you in tomorrow's Cherry Bomb, everyone, may the market be with you.